This is David Patrick Fitzstock Charts. Charts While You Sleep, Week 12, Weekend Market Analysis for March 23rd, 2019. We're in a 10-day uptrend. Whoa! We were in a 10-day uptrend. Depends on where we close here on Friday. I'm doing the video at noon. As of right now, we're breaking the 10 SMA. We'll get to that in a moment. We'll look at 1998 historical chart pattern comparison, which we've hit it out of the park. Again, with another pattern that repeats itself. All patterns eventually diverge. Is this one divergence? We'll get to that in a moment. 35% LME long market exposure. I never want the focus of the service to be what I do or what my market exposure is. Earlier in the week, I was up to 110% long market exposure. Had a ton of Apple calls on and was pretty much all in. And then I reduced some risk, went down to 80% long market exposure, bought some spider calls on Thursday, and made some really good money. And those went up 56%, scaled 3/4 in my swing account. And then on Friday, we gapped down, and I started taking off risk immediately. When Apple was in the green, I was taking off the risk. When Apple went red, took off the risk, took off all Apple in the trading account. Scaled 10% or half of my position because I was 20% long Apple in my swing account. I'm not picking a top. I'm paying myself. Scaled more QQQ because I'm up a ton on that. Scaled SPXL. And then stopped on the runner on SPXL at my cost basis. Because that's how you trade. You ideally want to put yourself in a position where you're trading with the house's money. You're trading with just risking profits. And that's what I like to do. Because you will have losing trades. But when we're riding a trend, 40-day uptrend to start the year and now a 10-day uptrend, you want to put yourself in a position to not give too much back. And that's what I did. And by the way, I will have losing trades. And the ESFL, I believe, has 10 losing trades year to date. And we'll get to those statistics in a moment. I believe we're batting about 86% or 87% winning percentage on the year with 10 losing trades and pretty close to 100 winning trades and like 4 or 5 no scales yet. But what is the most important is that you use the methodology that meets your risk profile, which means if I'm 110% long market exposure, that's not for everybody. Someone might be comfortable only being long 50%. That's their all in. And everybody's different. Someone had sent me an email earlier in the week. I think I was 70 or 80 or I can't remember percent long. And they're saying, why aren't you 100% long in an uptrend? Well, that's a great question. But once again, it goes back to the simple answer of everybody's different. Everybody is not 110%, 120%, 130% long market exposure when I get aggressive. And when I get aggressive like that, I can pull back the throttle. I can afford to pull back the throttle because I know I can get back in with options. And I know I can get back in being leveraged long with triple longs because that meets my risk profile. I say be fully invested of your comfort level. That's a better expression to use in uptrends because once again, everybody's different. Some people are only comfortable being long half their portfolio at all times. So that's their all in. That's their long market exposure with their comfort level. So let's look at the market. 90% club keeps growing. This is truly amazing. 78, I think we might have more. 78 different options, January, February, March, April contracts. 78 of them are up over 90%. Some of them are up 2, 3, 4, 500%. 29 triplers, 1,020. Just seems like yesterday we broke 1,000. 1,020 now. Options up over 90% since we launched the service. Unheard of statistics. Here is our historical chart pattern comparison. And by the way, the website could be up and down for the next few days. I do appreciate your patience with that. I don't think it's been down too much. And I'm not really redoing too many things on the website. A couple, the themes I'm changing, but everything on the menus in the top are going to be the same. So there's not much you're going to have to learn. There's going to be better graphics and easier to use on your phone, stuff like that. So with that said, there might be some technical difficulties over the next few days. And once again, I appreciate your patience. So on the right, 1998 was the Dow, the golden cross. We've been talking about this for a while. the Golden Cross, when it happened, the Dow actually came and tested it. Now, we didn't know where we were with this analog, if we were maybe up here or where we were. But look at the S&P, that MACD tried to cross. And we talked about in the video update that I do not like flat MACDs like this. It's very tricky. And right now, well, first of all, if we close here, we're going to get knocked out of trend. But right now, I would say, we were talking about quarter-end markups. It's tough to say if we're going to see a quarter-end markup, or are we going to see a quick visit down here before we go higher. I don't want to be a permabull. I'm not a permabull. You know, we were using, this is the spiders. Let's just change this to SPX real fast and blow it up. We know we were using this. This is our line in the sand. It was the week before OPEX, and then we changed our new line in the sand to there. So even if we get knocked out of trend, you know I'm still going to be bullish the market unless we would break a critical low or a pivotal point in the market. Not just the 10 SMA. That doesn't make me bearish. We're still above these two key ones. So it would be perfectly healthy if we did get knocked out of trend and come down here and tested this. Am I predicting that? Absolutely not. But I'm not ruling it out either. Okay? Thursday was a phenomenal day. Wednesday, we closed week. It was a more difficult day. And Friday, we came in. It was a more difficult day. So there's been a ton of trade setups. Once again, we've had over 115 different options, different stocks and options that have engaged off the ESFL this year. 115 plus. So you've had plenty of time to make money during different points of the uptrend. How you steer right now, once again, is up to your risk profile and what your comfort level is. You always will know my positions. They're going to be on a spreadsheet, and I'm going to post them live on Twitter. So you already know what I'm doing. You can't model what you're doing just off me because your risk profile is different. So allocate the proper amount of long market exposure that meets your risk profile. And then, like, for example, just to give you a case in point, if you're comfortable and your max comfort level is 50% in, all right, when we go into no trend, maybe you should go 35% in. When we go in downtrends, maybe you should be 10 to 15% in. That's just an example. Once again, it has to meet your comfort level. When we're in uptrends, I'm usually leveraged long, up over 100%. Every day? No. Many times throughout the uptrends? Yes. And on top of that, then I'm trading spider calls and apple calls with size. And if you use that leverage, I'm well over 100% many times. So with that said, right now as we speak, the S&P is down 50 handles. I've reduced long market exposure and posted on Twitter. I'm down to 35% long market exposure. Ooh, is it spooky? It's not spooky. It's just the way I trade. Okay? Right there, I went in, started going in. I scaled and added. Many times throughout this, I was 110, 130% long market exposure. I did go all cash here, and I started, getting long in here. Up in here is a little bit chippy, all right? Do I still think we get to 2,900 and 2,950 and 3,000? Yes, I do. How we get there, if you remember, I've been posting this for a while, that this was probably going to be a trading zone. And go back and look at some of the charts, which means it's going to be up and down. There's going to be trades, better days to trade. Is Friday a good day to trade? No, it's not, because we were net long going into Friday, and we gapped down, and then we saw price weakness confirmation throughout the day on 5-minute charts. And we'll look at those in a moment. But the current market conditions, if we close here, is in no trend. What's no trend telling us? Well, we all know, preserve year-to-date gains, preserve year-to-date capital. It doesn't mean that the market's going to fall apart. It means the market's getting sloppier, more difficult to trade, and the easy money of the uptrends is over for now. Now, can we go right back on an uptrend on Monday? Absolutely. Can we go right back? Actually, it would take till Tuesday. It depends on where we close. And by the way, we could still close in an uptrend. I'm just looking at the charts as of right now. So I don't want to confuse anybody. in a nutshell, the current market conditions, if we close below 10 SMA, we go into no trend. It's not bearish. It means the market's sloppy. When the market's sloppy, the odds are no longer in our favor. They might be 60-40 odds versus 85-15 odds. Why do we want to trade those odds? We're going to wait. We're going to wait to be aggressive for rules to engage back above the 10 SMA and or an uptrend. We're going to keep things simple. That can happen next week. It could happen the week after. We're not going to predict when it's going to happen. And once again, we're not even going to predict that we get knocked out of trend because I don't know where we're going to close. But I do know you're breaking a previous day's low. Obviously, that's not bullish. You're also breaking the 10 SMA intraday. That's not bullish short term. So going into before Friday, I would say we were going to 29.50 before. And now, just like that, one day is telling us there's a better chance probably we're going to test this golden cross if we're going to go higher. So let's look at everything else here. NASDAQ. Wow, that's a big move back down, and it does look like it wants to touch that golden cross. I tell you what, this type of a movement gets me excited. First of all, we're high stacked with gains on the year, which is unbelievable, right? Our 90% club is through the roof. But volatility isn't our friend in the short term, but volatility creates opportunity. It always does. Once the market settles back down. And I think this will create another great opportunity for us. I hope it creates a better opportunity for lower prices, which means, let's just give you an example. Let's create a downtrend line here. And let's say we do get knocked out of trend and we come down here and then we break this downtrend line. And then we have the 10 SMA come back down here and we go into an uptrend around here. That's an opportunity to get long from lower prices. I love those opportunities. Okay, so let's look at oil futures. Yeah, they're stalling at the 200 SMA. MACD's flat. And when we look at XLE, that's not a good trade. When we look at XL, the banks, this is not bullish. This is breaking key moving averages. And you have this gap here, and I would say we're coming to fill that gap. Because this wedge pattern, which is our least favorite pattern, is if you've been with the service since we launched, you can go under FCPS. Actually, it's under subscribers now on the website. This is our least favorite pattern. This is a wedge, which means you get to the top of the wedge, you come back in. You get to the bottom wedge, maybe you break it, and you come back in. This is not a momentum trade. So the financials are getting very volatile, and they're not showing us direction. IWM, that is a lower high after failing at the 200 SMA. That's probably concerning, and it's probably going to head back down here to 145. So I don't want to get anybody too bearish because I still think that the golden cross has a high probability of holding for the SPX and the NASDAQ. But when we look at some of these other indexes, they don't look good. There are shorts setting up in financials, in transports, and we haven't seen that in a while. IBB, that's a short setting up. So, even though we're going into no trend, I could scan the charts, and I'll scan them here with you. There's not a whole lot of long setting up. That doesn't mean that the market's going to go to lower next week because we're going to be in no trend if we close here. But it means that the setups are going to be short because many stocks are breaking lower rather than breaking higher. And as you lose leadership, and we only have 1, 2, 3 stocks leading on the way up, and the market does roll over, it gets heavy fast, as we're seeing. That's UDOW. Let's look at gold. Gold's starting to come back to life. And I said this whole way down, I said I was bullish bonds. I'm in bonds. And I said bonds are going to new highs in the year. And they're both flagging now above. And they're at 52-week high. So if you're long bonds, I'm long preferreds. And I actually wanted to get longer bonds. I never did this week. And I regret it because I thought the charts looked phenomenal with bonds. And I posted that many times and put it up on the video. So that's it for the indexes. Let's look at the stock charts. Whoa. I mean, do we have that 90% club still? We hit it out of the park. Those are up, and I think up more than, there's some Apple calls here. What did the Apple get up to? 197.70. So 27.70, those are in the money. 262%. 262%. Almost quadrupling your money Tripling your money is 200%. 100% is doubling your money. 200% is tripling. 300% is quadrupling. Almost quadrupling your money on a runner in Apple from our spreadsheet. Just from this month, March 4th. Crazy. So getting back to Apple, yeah, Apple still looks fine. I don't want to pick a top with it, but I had to pay myself. So I'm only 10% long Apple, and I added a ton this week. So where does Apple go? It might depend a little bit on the market. I would prefer to Apple to see another bull flag. And I still think that these gaps up here in Apple, I believe there is event risk on Apple on Monday. I'm not sure they have some kind of call or something. I really try not to pay attention to that stuff, but they are relevant. It is event risk. So, and I will post that again on Twitter so everyone's aware of it. But with that said, wherever the event risk takes the stock in the short term, whether it's higher or lower, I think it's going to gather itself and still come fill these gaps on the way up. This still looks like a heck of a bullish chart for higher prices after it rests some. So I'm 10% long Apple from 177. That's where my stop is right now on those shares. So I have a good cost basis. And you do too, because we've seen it on the ESFL many times. Probably 15 times on the ESFL. That's doubled since we launched the service. Amazon's bull flagging. It's resting with the rest of the market on Friday and giving some back, and that's what happens when the S&P futures tank by 50 handles on Friday. MACD looks good. This chart looks good, and I do think if we test the golden cross and then we start to come back higher, I think Apple and Amazon and Google are going to lead the way higher. Netflix pausing really hasn't done too much. Booking hasn't done anything forever. Expedia, those two stocks have been dead. Let's see, Tesla continues to roll over. Tesla's been a tough trade, long or short lately, and just by looking at that chart, it's suggesting 52-week lows. It just might take forever to get there, and you might see huge short squeezes in between. Every time Elon Musk talks, it seems like it's almost like the Fed talking. The stock goes crazy because, well, it is what it is. I don't want to get too into stuff like that, but the chart doesn't look very good with Tesla, and it hasn't looked good really for a while. Facebook, grinding to nowhere, did a double top. We got this golden cross. Most important thing, we have MACD at lows on the year. So it's going to be a tough long, and it's a tough short because it's right above the 50, the 200. It's just a tough new trade, and I would just avoid it. NVIDIA, we absolutely crushed it with this on their last entry. It could pause, and then I would say if we pause and refresh, you have Apple, you have Amazon, you have Google, and you have NVIDIA. So those would be the focus stocks going forward if we do touch that golden cross. Intel, breaking trend. Texas Instruments, pausing a little bit, Micron. Let's fly through some of these because really I don't see too much setting up on a long side. Avgo's really holding up pretty well. OLED, that's holding up pretty well too. Xilinx. Well, we said when Xilinx was here, it was breaking a downtrend. What did I say? I said Xilinx is going to go to new highs without MACD. New highs without MACD. And then most likely pause. So that one was actually pretty easy to predict. But the easier money to make, in my opinion, was in Apple, and that's why I traded Apple, not Xilinx. And I also traded spiders and QQQs and things like that. So, all right, so Xilinx, let's fly through these. Microsoft still looks good, and Microsoft is a leader. That's probably one of the 5 stocks I would look to buy on a dip if the market does do what we were just talking about. Adobe, Coop, that's a nasty reversal in Coop. Now, CRM, Workday. Yeah, those stocks all look really good, but they all could pull back if the market does. Splunk, that looks like a short setup. Team, SQ, Team is a leader to me also. Roku, Twitter, yeah. There's just really nothing setting up there. Let's look at these China stocks. Baba, you got a lower high, and MACD's at the lowest level basically of the year. I mean, I just see shorts setting up. And that doesn't mean the shorts are going to pay because we're not in a downtrend. But I would say for this week, I don't see really any longs besides bonds setting up. VMW, some of these still look fine to hold. But for new entries, yeah, it's tough to find a new long setup here for a new entry. Shop, Momo. Yeah, so I don't see any of those. So let's flip to the banks. Yeah, that's ugly. It's going to be a tough to short when this stock was just at 108 and now it's at 100. It's gone down 8% in 3 days. These banks are going to be, Bank of America was one of them that did, one of the 10 stocks that did not work this year. And that's why you define your risk, right? I mean, if you're a day trader, you get stopped at the low of the day. If you're a hybrid trader, you get stopped at the previous day's low. If you're a swing trader, you get stopped at the engagement spreadsheet focus list stop. So you stopped. It is what it is. It's a bad trade, didn't work, and you move on. Once again, I'll name them right now because I don't just have pom-poms out for the 90% club. We have losing trades too. JP Morgan, we had a losing trade with. Bank of America, we had a losing trade with. Vertex, Netflix, Amazon, Microchip, Kronos, Facebook, and I think Rig is pretty close to getting stopped. So those stocks I keep on a list too, just like my 90% club. And that's part of trading. No one has a methodology that's flawless that you'll never lose money. If that existed, everyone would be doing it. Everybody would be rich. And obviously all the algos, the black boxes, and fund managers would be all over it. That doesn't exist. Normally in the industry, if you're 60-40, you're batting pretty well. We've batted well over 75% winning percentage since the service, and we're above 85 this year, which is remarkable. So, but you are going to have losing trades, and you have to know how to manage them. Docu, IQ, those look bearish. Flying through these, Visa and MasterCard still holding up pretty well. PayPal, it still looks fine and is a big leader. But I just tell you what, that does not look good. Goldman Sachs does not look good. Morgan Stanley does not look good. None of those look good. Tilray, Kronos, those are rolling over. CGC, that's rolling over. Let's go to COP. Let's go to the oils. Those do not look good. And that's what happens when you see this grind sideways. And here's the stop that I think we might have got stopped on. Yeah, this is a bull flag above a downtrend line. We take that 100% of the time, and we get paid probably 85% of the time, right? This one didn't work, and you get stopped. And MACD's heading lower, and the stock is getting sloppier. So you just let it go, and you move on. Schlumberger, Marathon, they all look not good. Let's go to casinos. That looks... Win does look like a short setup, by the way. MGM, that looks like a short setup, too. Let's look at biotechs, because we saw the IBB looked like a short setup. Amgen, short. Gilead, possibly. Jazz, Alexion. Yeah, not much momentum there. Vertex. Okay, come on. That's really not doing too much. ISRG is one of my favorite stocks in that sector. What's it doing? Still holding the 2 SMA, 10 SMA and holding trend. REGN, that looks lower, and that's been a big leader. Not too much to say about that sector. Wolverine, that looks like a short. Monster, it's a little bit oversold. CMG has just been a heck of a leader. I almost wish it would rest some and refresh. UBNT, double top or higher. Slightly, actually, there's a slightly lower high. MACD's heading lower. That could rest. That could be setting up short too. Twilio still looks good. There's probably like 10 stocks that still look good. The problem is they're not great setups to long right now for new longs. And if they're not setting up for a new long, you just don't put the trade on. If you have the trade on, you manage the trade with runners. Sell covered calls. Raise your stop to your entry. You just manage your risk right now, because there's a good chance we get knocked out of trend on Friday. And the whole way up, I said keep an open mind. The whole way up, keep an open mind. We have bogeys. I still do think we get up here, but you have to keep an open mind. If the market was so easy to predict, once again, everybody would be making money. It's not. I scan charts looking to give us an edge with historical chart pattern because price pattern repeats itself. We know that for a fact. We also know this methodology works for a fact with the 90% club. But one thing we, in addition, know for a fact is we make our money in bull markets and uptrends. When we go into bear markets, there'll be a lot more short setting up, and it's going to be a little bit more difficult to trade. People think you can make money on both sides. I tell everybody you don't have to short the market. Even in 2008, which was my best year, you didn't have to short. You had to stay cash, and you could have taken long setups if you waited for the right time for rules of engagement. What happens is if you feel you have to trade both sides, or you can, what happens is you get stuck short on one time and the market goes flying up. So not only do you lose on the short, you miss the whole way back up. And that's why, to me, I always like to focus on bull markets and uptrends. And when we go in bear markets, preserving capital. When we go in downtrends and no trends, preserve capital. The methodology works best in uptrends. And what do we do in no trends and downtrends? Preserve year-to-date capital, preserve all capital, preserve year-to-date gains, because we have huge gains. If you don't have huge gains after a 40-day uptrend, a 10-day uptrend, we need to talk. Send me an email. See what I can do to help you out. Because the methodology is working, and if it's not working for you, I want to help. That's all I got for you. Charts Way Sleep. Have a great weekend.